Gold is pumping, but is it enough? Larry Lepard just dropped a bombshell prediction. Bitcoin is about to break the financial system as we know it. With $1 million Bitcoin inside and gold struggling to keep up, is this the final transition to a Bitcoin standard? Stick around as we uncover why this shift is happening faster than you think. And also please check out this other video which actually gives you a breakdown difference between the attributes of Bitcoin and gold.
I mean, we're in a sovereign debt crisis. Let's face it. I think that started really with the war in the Ukraine. It was when the real interest rate started to diverge from the price of the sovereign of the assets that are sound money, gold and Bitcoin. And since that time, gold and Bitcoin performance has just crushed, bonds and sovereign debt. The gold was the best form of sound money until Bitcoin came along. Bitcoin's a much better form of sound money today. What's going on in gold today specifically, as you probably noticed, we're recording this on the 31st of January, is that it just broke out to a new all-time high of $2,800. And some people are attributing, I've been watching and reading some of the stuff online, watched a few pods, and some people are saying, well, this is just because of the Trump tariffs, and he's probably going to place tariffs on gold produced overseas. I don't think that's it. I think it's, one, I'm not sure he's going to do that. We'll find out. But two, I think it's more likely that just what's going on is there are actually more and more, and this is a chart I saw that was rather compelling. There are more and more people asking for physical delivery of their gold. And why do people do that? Well, because they don't necessarily trust the custodians of the gold, and that's always been the issue with gold. They don't trust the system. And those of us who've been in the gold world for a very long time know that they have created a much larger number of paper claims, in our opinion, than they have underlying ounces of gold. So this is the gold market, very much like the banking market. If people are familiar with banking, they understand fractional reserve lending, which is to say that a bank can lend out more than it has in deposits, right? Because not everyone comes and asks for their deposit back at the same time. And that's how the money supply grows. That's the money multiplier. Well, that actually started way back when with goldsmiths in Europe in the Middle Ages. But it's continued to this day, where I think there are more paper receipts for gold than there are underlying ounces. The amount of that is up for debate, but it could be anywhere between 10 claims for every 1 ounce, 100 claims for every 1 ounce. So, what I see going on, what we can see in the data, is that there are big entities actually asking and saying, well, yeah, that's right. I know you say you're holding gold for me and I've got a paper claim for it. Why don't you send it to me? Why don't you actually give me the gold and I'll store it myself in my safe or my own depository? That started to really increase, which to me indicates that people are starting to say, hey, hang on a second. Maybe I don't trust these people who say they're holding my gold. Many of us, even Kaiser before he started in Bitcoin, always thought that was the Achilles heel of the precious metals market. They'd manipulated it with paper, but if every paper holder said, please give me the physical, there wouldn't be enough physical to go around. And so I think that's what's driving the breakout in gold right now. Bitcoin's going to continue to massively outperform gold, and Bitcoin is going to eventually demonetize gold. But I say eventually cautiously, because it doesn't happen overnight. And so, in this inflationary cycle, I have every confidence gold will get to 5,000, 10,000, maybe 15,000. But while it's doing that, 5,000 would be, almost a double from today. Well, we're at 2,800, but a little less than double from today. Bitcoin's going to go from 100,000 to a million, and from a million to 2 million. So, which is going to outperform Bitcoin by a huge measure. But gold isn't going to go away because there's 6 or 8 billion people on the planet. A lot of them think gold is sound money, and the money, the base money, the fiat currencies are all failing. So they're both going to go up a lot. But Bitcoin's going to continue to demonetize gold. It's going to demonetize real estate. There's so much monetary premium in things where it really shouldn't be there. Real estate, it's a place to live. It's nice. The nice thing is it can't print any more of it, but it only has, it ought to be valued on its utility, not because it's a store of value, because there are much better stores of value, Bitcoin being one of them.
So as a wrap up to today's episode, some really interesting insights from Larry, and I picked out a couple of key clips which I want to draw your attention on, which is pretty much why Bitcoin is rapidly becoming that risk-off asset, even comparing to gold. Why I raised the point about gold, because one of the reasons why gold has actually been superseded by Bitcoin as the hardest asset is because gold is imperfect. Even though it's a world recognized hard asset, is no longer a hard asset because of Bitcoin. It's true that it is a very good hard asset as a store of value, but its imperfections are really to do with, well, it can easily be confiscated by authorities and even at airports. So let's take the case that a person wants to carry a handful of gold coins or jewelry in the briefcase, and when they go through the airport security, well, that would obviously raise the alarms and bells and whistles, as well as the confiscation aspect, that gold can also be confiscated by governments and authorities at any moment in time. And also, he raised an interesting point about the actual aspect of paper gold. Given that it has a much longer history as a store of value, even before Bitcoin, there is obviously this issue around paper gold. What does Larry means by this is there's a difference between the custodians of gold. So let's paint a scenario where gold is held in a depository bank or in a private sealed vaults, usually in central banks themselves or even major banks, commercial banks as well. Now, they are the custodians of deposits of gold, whether it's from other nations or even institutions, and I may dare even say so, high net worth individuals. But there's always a paper claim or a paper note that is actually a way of controlling who owns the underlying ounces of gold through the issuance of this paper gold. Right. This is the issue because the original depositors of gold, the actual owners of the physical gold itself, which are held in these custodian banks, central banks, and these vaults themselves, they are rapidly becoming wary and untrustworthy of those custodians, precisely because of this issue of several hundreds of thousands or even millions copies of these paper gold on the actual underlying itself, and they just want to have their gold back, which is another issue, right? It's not just the issue of the central banking authorities or governments or even commercial banks potentially denying you the return of gold, the actual gold itself, but also the actual claims of the paper copies of gold. This is the fundamental issue, and this is what I meant by some example defects of gold. It's the confiscatability aspect of it. It's not as easily portable if you compare with Bitcoin, because you have your keys, you own your Bitcoins. Well, with gold, you have an additional burden, which is portability. And also, it's really difficult to verify who actually owns the actual gold itself. I mean, there's a chemical process where you need to deconstruct and melt the gold in order to find out the authenticity of the gold and even who owns it, which brings in additional cost, additional time and delay into the process of verifiability, which is another imperfection of gold if you compare with Bitcoin, which is very easily verifiable. I mean, you've got an underlying public ledger within the Bitcoin network itself. So the transactions between the various Bitcoin wallet addresses are completely transparent and verifiable and cannot be tampered with, which is an additional attribute that Bitcoin has over gold. Which is all the more reason why I said at the very outset of this video to also check out this other video where I go into depth as to what are those attribute differences between gold and Bitcoin. So if you enjoyed today's episode, I'd appreciate if you hit the like button and also share the video to other like-minded friends and colleagues at work who might be interested to learn more. And if you haven't done so already, please subscribe to my channel, as I regularly post some interesting videos such as these, anything to do with Bitcoin, blockchain technology and the world of finance. So until next time,